Okay, it is what are we? 4th of August, Friday. I haven't done a video for a while, so I thought I'd update one now because dollar index is quite interesting. So dollar's been heading lower since the beginning of January, quite clearly. Once we broke lower through this trend line, this goes back a long way, this trend line. I'll show you in a minute on the weekly chart. Once we broke through there, the losses accelerated. We had a little pause here through middle of May to middle of June, and again we've accelerated to the downside recently. Been oversold for a long time. That has not triggered anything in the way of a bounce. So now looking a little bit longer term on the weekly chart, this gives a clearer picture. There's that trend line I was talking about that we broke in May. In fact, when you see on the weekly chart, you see how decisively we broke that trend line, and that trend line goes back to, let me see now, 2014, September 20, no, that's May 2014. So middle of 2014, so you can see that is a very significant trend line. That's about 3 years old. So once that was broken, we've accelerated to the downside. Now I'm just going to close this up a little bit so you can see where that trend line is coming from that we've just broken below. There we go. Trend line going back to here, what's this? What year is this? 2011. So you can see this trend line here where we bottomed above it last year, and now we've broken below it. So again, another negative signal for this longer term chart of the dollar index. But we are now approaching the 200-week moving average at 92.32. Actually, I'm going to scrunch this up again because we do have an important fib support level, and I've been banging on about this for a little while. The 92.90 area, keep expanding and contracting this, but let me see how far I'm going to have to go back to show you this. Okay, this just shows you how far back I do go. In fact, the only way to do this is with a monthly chart. There you go, that's better. Right, I've taken my fibs here all the way back to 1985, so I'm really going back a long way. We broke above the 23.6% fib at 92.88. That was back in the beginning of 2015, and since then we managed to hold quite nicely above here. Right, remember where you've seen that 23.6% at 92.88. Okay, now I'm going to expand right out again on this monthly chart and show you why it's relevant. So it has acted as good support. You see how we held on to that throughout the rest of 2015, and again in 2016, okay, we dipped a little bit below it, but only 100 pips, which is nothing when you're looking at a monthly chart, and we certainly closed the month. Let's see, the last trade was well above that 92.90 support. So I do think this is important, this 92.90, 92.80 area. We're trying to move below it as I speak. We have got a less important but still important 38.2% fib support at 91.30. Now I know that's 100 pips lower. Sorry, 91.95, call it. I know that's 100 pips lower, but that really is the last line of defense for bulls. So if we can't close above 92.90 tonight, I wouldn't be surprised at all if we do test that 2016 low around the 91.95, 91.90 area, and then bulls absolutely must group together and make sure the dollar bounces from that level, or we're in all sorts of further trouble. Back to the weekly chart. We are really very oversold on the slow stochastic on the weekly chart. We have got the 200-week moving average at around 92.30. So 92.90, 92.80, then 92.30 from the 200-week moving average, and then 91, sort of 95 area. These are the three big levels. Can the dollar bounce at one of those levels, turn around and resume what is, you could call this a bit of a bull trend? We did start to rally back in, what was this year, remind myself, 2011. So you could call this a 6-year bull market. You certainly could call this a 6-year bull market, but we've absolutely got to hold above 91.90, or as I say, we could bounce just above 91.90, either at 92.80 or 92.30. It's worth finishing off with a look at the Euro US dollar because I think that makes up the majority of the dollar index. So what is this showing us? Well, it looks pretty positive to me. This is the monthly chart. We held the 61.8 support at 101.01. Well, we bounced well above it, actually 103.40 or 103.35. So okay, it's a couple hundred pips, which when you're looking at a monthly or a yearly chart isn't a huge amount. But still, we managed a good bounce above this important support level, which I was actually hoping to buy at, but obviously never got the chance. If we look at the weekly chart, to sort of zoom in on the more recent years, you can see we were trading in what looked like quite a big sideways trend over the last two and a half years, and then we came up towards that trend line here. We did stall, you can see with this red candle, we did stall at this 2-year trend line, but then broke through this trend line, which then acted perfectly as support on the following week. And now we're up through this cluster of important Fibonacci resistance around the as far as 116.90 up to 117.40. Really straight through there, and obviously that level, that has held as support now with a low this week at 117.21. We're also through the 200-week moving average. Really, there is nothing on this chart that's telling me that the euro dollar is about to turn around and reverse. So that is worrying for bulls of the dollar index.